Hello, everyone. Today we will take a deeper look at two core technologies in the field of artificial intelligence: machine learning and natural language processing. We will examine how they reshape the operational models of the financial industry, as well as the specific roles they play in practical business scenarios. In fact, these two technologies are not far from us. From real-time security checks when swiping a credit card to instant responses from intelligent customer service in banking apps, both are already at work behind the scenes. Next, we will uncover their principles and applications step by step. Machine learning, enabling computers to learn from data. The core logic of machine learning is to analyze massive datasets through algorithms, autonomously summarize patterns and form experience. It then uses this experience to solve new problems. In the financial sector, this ability to find answers from data is revolutionizing traditional business models. 1. Credit approval. From manual screening to intelligent scoring. Traditional credit approval relies on manual review. Loan officers must verify applicants' income certificates, credit reports, and asset proofs one by one. This process is not only inefficient, a single loan approval often takes 3 to 5 working days, but may also be biased due to differences in personal judgment. For example, two applicants with the same income may receive different results if one loan officer places more emphasis on stable employment. Machine learning has completely changed this situation. The system can integrate far more dimensions of information than humans. In addition to traditional income and credit data, it can include consumption behavior, such as the proportion of fixed monthly expenses or regularity of credit card repayments. Social features, such as the stability of contacts and communication records. And even lifestyle patterns, such as frequency of address changes. After processing these data through algorithmic models, the system generates a quantified credit score that directly reflects the applicant's default risk. For instance, after an internet bank introduced machine learning models, the average approval time for small loans was reduced from 72 hours to 5 minutes, while the bad debt rate dropped by 40%. This is because the model can capture details overlooked by humans. For example, consistently shopping at the same supermarket for 3 consecutive months may better reflect repayment stability than owning property. 2. Stock prediction. Mining market patterns from data. Stock market fluctuations are influenced by multiple factors, but machine learning can uncover hidden patterns from historical data. The model analyzes information such as historical price trends, changes in trading volume, company financial indicators, e.g., price-to-earnings ratio, net profit growth rate, macroeconomic data, e.g., interest rates, exchange rates, and industry policy dynamics. By modeling and analyzing these data, the system can output probabilities of future price movements. For example, when a stock's price-to-earnings ratio is 30% lower than the industry average and net profit has grown for 3 consecutive quarters, the model may predict a 65% probability of price increase in the next month. Although predictions cannot be 100% accurate, they provide valuable data support. Currently, 17 of the world's top 20 hedge funds use machine learning to assist trading decisions. Some funds have achieved annualized returns more than 15% higher than traditional strategies. 2. Natural language processing, enabling computers to understand human language. The core of natural language processing, NLP, is to allow computers to comprehend, analyze, and generate human language. This technology shines in text-intensive scenarios within the financial sector. 1. Sentiment analysis, capturing market emotional signals. Financial market sentiment is often driven by textual information. A negative company news report may cause stock prices to fall, while an optimistic industry report may push a sector upward. NLP can decode sentiment in such text, determining whether they are positive, negative, or neutral. For example, the system can crawl content from news sites, social media, and brokerage reports in real time, analyzing information such as a listed company executive under investigation or central bank lowering reserve requirements. If the proportion of negative information about a stock suddenly rises from 10% to 60%, the model issues a warning, alerting investors to potential risks. During a real estate company's debt crisis in 2022, an NLP model detected intensifying concerns about repayment in bondholder forums 3 days in advance, giving institutional investors time to respond. 2. Intelligent Investment Advisory. A 24-hour online financial advisor. In intelligent advisory services, NLP acts as the bridge between users and systems. When a user asks, "I have 200,000 Chinese yuan and want to buy a house in 5 years. How should I invest?" NLP first extracts key information: capital amount, 200,000 Chinese yuan, investment horizon, 5 years, goal, buying a house, risk preference relatively conservative. It then combines this with machine learning-based asset allocation models to provide suggestions. For example, 40% in fixed deposits, 30% in bond funds, 20% in index funds, and 10% in money market funds. More advanced systems can handle complex dialogues. For example, if the user follows up with, "If housing prices fall, should I adjust the plan?" NLP interprets housing prices fall as reduced pressure on the home buying goal and may recommend increasing the proportion of equity assets. At present, mainstream domestic banks' intelligent advisory services can handle more than 85% of common financial consultations, with response times under 2 seconds. 3. Document processing, giving financial documents an intelligent checkup. Financial documents, contracts, financial reports, regulatory filings, are often lengthy and technical. Manual processing is inefficient and error-prone. NLP can achieve automatic extraction of key information plus risk screening. For example, when reviewing loan contracts, the system can quickly locate clauses such as whether the interest rate exceeds the legal limit or clarity of collateral description. When analyzing annual reports of listed companies, it can automatically calculate indicators such as R&D expense ratio and amount of related party transactions, compare them with industry averages, and flag anomalies. When processing regulatory documents, it can extract compliance requirements and match them with corporate operations, highlighting risks such as a certain business failing to meet filing requirements. One insurance company introduced NLP to process policies, improving review efficiency by 80% and reducing error rates from 6% to 0.5%. 3. Technology synergy. The fusion of 1 + 1 > 2. The combination of machine learning and natural language processing can unleash even greater power. For example, in risk monitoring, machine learning analyzes transaction data to identify anomalies such as an account making large transfers at midnight for several consecutive days. NLP simultaneously analyzes news reports and social media evaluations related to the account's associated enterprise. If it detects negative information such as exposed for defaulting on payments, the system then raises the risk level from general concern to high risk, triggering manual investigation. This dual-dimension analysis of data plus text is more precise in identifying risks than either technology alone. Today we learned how machine learning extracts patterns from data, credit approval, stock prediction, and how natural language processing breaks the language barrier, sentiment analysis, intelligent advisory, document processing. These two technologies not only improve the efficiency of financial services but also reduce risks and optimize user experience. Of course, the technologies are not perfect. Machine learning may produce misjudgments due to data bias, and NLP's understanding of complex semantics still has room for improvement. But as the technologies continue to evolve, their applications in finance will become deeper and more extensive. Finally, let me leave you with a thought. When machines can handle most financial tasks, where will the core value of human professionals lie? I welcome further discussion after class. That concludes today's session. See you next time.